All right, so welcome to another video. In today's episode, we're going to take a look at a 0-DTE SPX butterfly. So when we look at 0-DTE, they blow up and explode. So you got to make sure you kind of hit them, get in, get out, and you're done. So that's the way they work. I'm going to show you about a 22% on a 0-DTE trade, about how to set one up or construction. At the time of setting this up, that's what the calculations were, but obviously those things can change. So let's take a look at kind of the trading panel and platform. So one big thing to keep in mind is that 0-DTEs, they are fast. So when we look at setting this up, we're going to go into the SPX. So there it is. You pull up the SPX, you go to the 0-DTE. This is good. We're in Eastern time, 10:45. You can do this pretty much any time throughout the day. That's up to you. But one big thing to keep in mind is the risk that you'll be putting on. So we were going to pick a direction for this trade. You got to either go bullish or bearish. You could do this with a vertical, but butterflies, what happens with them is they are quite cost effective. So that makes it nice. I'm going to go on the bearish side just because the market's a little toppy, just to show you where the SPX is. It's been grinding here to the upside. So I believe it's a little toppy, but you just don't know with 0-day. All you're looking for is from the point you get in, it moves in your favor. So here, what we've got is we have this movement there to the let's see here, we go this movement to the upside. So if we just get a little pop down, then your trade's a winner. So here's how the trade goes and construction. I'm going to start on the put side. We'll go in, buy, right click buy, and I'll go to a butterfly here on the side. And now you've got this setup right here. So we've got this basic butterfly construction. Now, this is not exactly what I want to show you yet. What we can do is, in order to fine tune this, we're going to drop one of the legs further down, and that will be this upper leg. So if I'm going bearish, I'm going to go with the upper leg. So it can go this way. And what you'll see now is I've got a trade that also has a pretty good theta. So I've got a little bit more room on the upside, but I've also got a room if it stands still, and if it pulls back, I'm good. So that's the beauty behind this, is that you've got two contracts here at the 4555, which allows that theta to be quite powerful compared to some of the other trades. So you can actually take this trade out earlier, but you could set this up in this construction. All you're looking for a little move down, and you can already take it off from the risk that's on here. So this is 350 in capital. Let me just redo this calculation. So 350 or 365. So you're looking at 135 divided by, well, now it's 105. 105 on, now it's 175. Let's just say on 365. 365. So roughly about 28%. So that depends on the construction, depends on where you are on the trade. Like if you're a little to the right or to the left, that will vary, but that's what you're looking for on these types of trades. I wouldn't go too big, too heavy, too crazy, too quick on these types of trades. They are 0-day. So if you're not spreading your risk, that can be quite a bit dangerous. So I'd be a little bit more mindful and careful on this type of construction. It's more advanced than just doing a vertical trade. So when you do the setup, it also takes a little bit of time to get filled sometimes. So you have to play with the fills like I'm doing right here. Obviously, this is a paper platform here, so it's doesn't always fill exactly proper. But with the SPX, you will have to play a little bit with getting in. So anyway, now that you got in it, and once you're in that trade, now you let it work, and if it pulls back just slightly, you could already take the trade off. You don't have to sit in it the whole day, or you could let it expire in the in this area as well. There's no assignment with SPX, so that's nice. It's cash settled, so you don't have to worry about that. If you do this on something else, then you could have some issues and some problems. So just be aware of that and be mindful. Anyways, other than that, I mean, it's a pretty simple trade construction for people that understand butterflies. But it is a fast trade. It moves quick. It can go against you very fast, and you do have to be prepared for it to kind of go maybe to full expiration. I've seen these things, some people that put on stops on these, and I'll just warn you on stops. I've seen these things go all the way against you, like over here, because it's a 0-day. I've seen it go 10 points, 20 points against you, where you feel like you should get out and you want to put a stop in play. And then all of a sudden it comes right back in the last 15, 20 minutes. So be careful if you're putting a stop on these. you'll get stopped out a lot. And you have to be comfortable with it going against you quite a bit. If you're not, then don't put these trades on, because otherwise what's going to happen is that you're going to get stopped out, you're going to get stopped out, you're going to get stopped out, and then it's going to keep coming back right in, and it's going to tease you, and you're going to say, oh, and then you're not going to put a stop, and then it'll expire worthless. So it'll play a lot of mental tricks on you. So be very careful with these types of setups. Anyways, I just want to show you this concept. So hopefully, you like it and enjoy it, but it's 0 day, so it does move quick. Anyways, thanks for all the comments, positive vibes, and all the things you guys write. Truly appreciate it. Feel free to visit our website at tradersfly.com. Learn, evolve, grow, a lot of good courses, and check out the one-on-one coaching sessions there as well. Anyways, thanks for joining me. I will see you in the next video. Take care.